Good morning and welcome back to another session of weekly review of Indian equity markets. Uh, we have had an interesting week, and both in domestic and global markets. And this week was heavier basis events and certain kind of decisions from Fed and Reserve Bank of India. So we will see the reaction of markets of both the key events which have happened. But as we see on this chart, on Nifty on a daily basis, weekly basis, closed the week on positive 0.1% approximately. What is interesting is the structure of Nifty here. If you see on weekly basis, we printed a long tail now, right? And when we take this down to daily time frame, you look at the long tail, right? So there was a bearish push down which was happening, right? This was a fairly wide range candle and it turned the entire complexion of the market to a fair bit of negative sentiment per se, right? But if you see this, there was no follow through, and then now we are seeing a long tail and there is a gap, two back to back gaps, and these gaps we have seen in our previous experience are very strong and it definitely turns the entire market complexion to fairly positive trend per se. You see the gaps here, right? So there are three back-to-back gaps on a daily basis, and each gap or each strength of the candle is better than the previous one, right? Now, while we are not seeing that, which essentially means that market is still not fully convinced or was not fully convinced on each of the days, but we still ended up having positive close to the market, which is very good. So from here, what do we see? What can happen, right? Let's look at some of the. Let's try and put in indicators as we have moved into daily time frame. I think my day 50 DMA is not working, so let's convert 100 into 50. Yeah. If you see, market is moved above 50 DMA and has moved with quite a bit of force, and we are fairly far away from 200 DMA. I think overall market remains positive. One more important thing to consider is that this was a consolidation zone while we were correcting from the previous high levels, right? And we've just tested out that consolidation zone and again taken off. And I think if we remain here and if we are able to take out this large candle, which is 19,780, 760, 770 kind of candle, we are definitely headed towards another all-time high. So now we have printed a higher high, higher low. A pivot is formed, and then there is all likelihood that we breach this to this. So, so this is broadly what we have seen in Nifty. Now, what we will also like to do is we will get into few of the indices and see the strength of those sectors within the broad Nifty. But as we say, customer as we do every week, right? Let's look at Nifty and Bank Nifty. So Bank Nifty is if you're on a weekly basis, this is again printed a strong candle. Right? It's a bullish hammer is what we printed, or it's a hammer is what has got printed, right? So after a major push down on a weekly basis from a 4% correction, we moved to 0.06, and then this week again we have printed a minus 5% candle. But the beauty of this candle is it comes with a long tail. So Nifty again, in case of Bank Nifty, we've while we could not print a higher high, but we have definitely printed a higher low. Now let's turn this into daily candles and see what is happening with our indicator. So the Bank Nifty is 50 below 50 DMA. So does it mean that we are completely out of woods and the complexion of Bank Nifty is changed completely? The answer is no. While you have seen Nifty being positive, Bank Nifty is not as positive as Nifty. So I think this is one instrument that we should let alone for some time, and I think focus on Nifty. So do we see a probability of Bank Nifty also making a higher high? Yes, it is possible, but for that to happen, I think Bank Nifty has to first take out this wide range candle, which is far away. So let's see as to how Bank Nifty behaves in this journey of 43 400s to 45 200. So another 700 800 points. So let's see how Bank Nifty decides to do this journey. We have seen uh, many a times that it just does this in a day or two, right? So I think let's not, as I keep saying, let's not run ahead of the markets. Let's focus on what is happening, live in the present, and see what is happening. Uh, if you see, we are in the we are in the process of forming a cup and handle, not cup and handle, a volatility contraction pattern. You see the volatility. So let's see what Bank Nifty does in next few weeks or a month or so. But overall texture of Bank Nifty is not as positive as Nifty. Having said that, there's nothing wrong with Bank Nifty. It is just forming a contraction pattern. I think this is what broad markets are doing. If you see, let's move to hourly chart in case of Bank Nifty. In case of Bank Nifty, let's mark out this week. Look at what is happening on hourly basis in case of, we're talking about October 2nd. This is the week, October 6th, right? If you see Bank Nifty, uh, so RBI policy market took very positively and made a wide range candle, right? And it was a it was one of the strongest candles that we have seen in case of positive candle that we've seen last many weeks, I would say, uh, right? So in last couple of weeks, pardon me for that. And now, after the policy, as the commentary started playing out, there was a discussion around the fact that the RBI can suck out liquidity from the market to continue to fight inflation, which had a major impact on the debt markets, not as much in equity, but there's some bit of sell off, immediate sell off that you see. So this entire volatility came in because of as the policy discussion started happening, or as the RBI started fielding questions from the media. So this is what we are seeing in Nifty and Bank Nifty for the week. Now let's come down to one of the indices that I'm extremely positive and interested. I'm an interested party here is IT. Now, IT, I think we started tracking very closely somewhere here. No, sorry, I won't see here. Somewhere here. No, much earlier. I think as this contraction was forming, we had started tracking it somewhere here, right? If you see the structure of IT indices, right, look at the way it has stabilized over last 1 year or so, and then there was a breakout couple of weeks back. We are testing out the breakout zone, and we are, in all probability, we are all set to take off. And if we were to follow suit of what is happening in the global markets, especially Nasdaq, I think we are up for a very very good time for Nifty IT. So this is one indices that I'm definitely interested in. We will look at structure of few of the stocks within this index, and you can see how beautifully they are contracting as well along with the index. I think we can do it right away rather than spending coming back and trying to do it. Uh, TCS did the same. Look at TCS, right? Look at TechM. Now, obviously, the sell-off in TechM or these candles are fairly wide range and do not give a lot of confidence, but there's nothing wrong. I think it's a beautiful contraction which is playing out. Emphasis is doing all the right things, though it is not a contraction pattern per se, but it's doing all the right things. Uh, LTTS is one of the stocks. Obviously, it's contracted. It's made a lot of right structures in the on the way up. Wipro again similar thing. LTIM similar thing. HCL is look at the contraction which is playing out in HCL. Persistent. I think all these stock the pullback in Coforge is fairly strong or stronger, definitely stronger than the other stocks. But I think this is one indices which is definitely looking very, very interesting and something which will definitely keep me interested. I'm an interested party out here. Now, let's come back to our index review. We've seen IT, we've seen, let's look at auto, which has fueled so much of positive energy in the market. Auto again has corrected, and the correction is slightly deeper as compared to other, but you can't find fault with auto. Look at the way it has supported the indices. Nifty 500. This is something that I saw today. It's a beautiful head and shoulder pattern. What would be the impact of it? I think you can measure the possible up move such kind of pattern can give. Right. The neckline 25% kind of number. So from here, if we talk about this is probable, but it plays out in long term. It doesn't happen overnight or in couple of days. Mid caps, nothing wrong. So let's look at it. Nifty Finance contraction, test of breakout, FMCG consolidating within the long term. But look at the way FMCG moves, right? So FMCG is doing all the right things. There's no reason to worry about FMCG. Auto, we've already seen. Services is something that I told I'm interested. Look at the way services is contracting. It's it tried to break out. It's corrected. I think these are pivots which this index is forming, but I am definitely going to be interested in services. And this time around, if the breakout plays, I think the risk reward would be much more in favor of, in my favor or in the favor of trader because this is going to be your stop loss. This is going to be your entry point and 6%, which is absolutely digestible range. Have you seen CNX consumption? See, it's making continuously making higher high and one of the leading stocks, leading indices, and there's nothing happening to this index. If you've seen Nifty, Bank Nifty, they corrected, they tried to make or get at, were trying to come as close to the lower previous pivot, but in this case, they are far away and continue to remain fairly positive. Metal test of breakout, test of long-term contraction that we are seeing. Can it correct? Yes, it can. So consumer durable, it just took off and took everyone by surprise, and then forming another long-term continuation pattern, which is black pattern. PSU Bank has been in its own world, and look at the way it is kind of just continues to make higher high. Infra, another solid index which continues to propel the index forward. Nifty oil and gas. I do not look at this index closely, so I won't make too many comments about it. Mid cap 100 continues to remain in a very positive zone. There's nothing happening. There's no downward pressure per se. Small cap 250, no downward pressure. So I think overall markets have turned positive again. If the sentiment was turning to be slightly more dicey and if I were to say one were to question what was happening with the holding, I think market has just turned around and is trying to make another large move. Trying to is the important word or key word. It's we are not going to predict saying that it's going to definitely make a strong move. We just need to look at what is the structure of the market and accordingly start moving with it. Now let's look at few of the global indices. Now, oil faced a stiff resistance at the previous breakdown zone. Though it is still above 50 DMA, it's testing 50 DMA, it's testing the breakout zone, but the kind of correction that we've seen this week is definitely 8.5% correction in a week is not a small number, right? This stems from the fact that I'll do some more reading around this as to why oil has corrected so sharply, but this is definitely something which has turned which has made equity markets look positive. Start thinking of sorry, I'm sorry about that. So I was saying that oil has reacted sharply, 10% correction, 9% correction in oil, which essentially means that it has fairly strong positive impact on what can happen with inflation and crude prices and so on and so forth, which essentially has made the market participants, equity market participants, a lot more bullish as this would again act as a sentiment driver to cool off the inflation. So I think that's what I was trying to say. I'm afraid I could not put the right words in the while I was forming the sentence. So that's broadly what I think of oil. This is a important index. Let's look at uh, U.S. market, which is where all this begins. And so, test of breakout above 50 DMA. Sorry, test of breakout and test of 200 DMA. This is very positive. I think we've tested 200 DMA and made a bullish engulfing candle, and it has engulfed previous almost 5 6 days of or 4 5 days of correction that we have what we are seeing. And look at the structure; it's a fairly strong tail here, right? If we are able to take out this candle, I think S&P 500 would again turn extremely positive, would turn positive again. Let's look at Nasdaq 500, Nasdaq 100, long tail, strong closing above previous week as compared to SPX, where we are still below previous week. The push down is fairly strong. Look at Nasdaq. We printed, we tested the breakout. Actually, this is what we should consider as breakout. But we formed a lower high, but the candle is positive. I think this is something that I'm looking for Nasdaq to breach to to turn ultra bullish once again or to turn bullish once again, right? It's a good structure, but we are still in lower high and lower low regime. Let's not try to predict that now we are going to make a new high new all-time high and all that. Let Nasdaq take out this level, and that's going to be an interesting one to look at. As I was saying, that you should look at bond markets reacted negatively post the monetary policy. Look at the breakout. I think this is not very positive. We have had a lot of good news around that Indian bond markets would be included in emerging market index, and there could be a lot of inflows which can come into India. But as we speak, the traders are behaving very differently, right? So look at the size of correction we are seeing. 3.5% in a matter of 2 weeks. This is definitely not a positive indication as far as the bond markets are concerned. I think overall markets remain in a good positive zone. What's surprising is the way mid cap, small cap continue to hold on. And I was looking at some volume charts as well, and volumes also seem to be in favor of mid and small caps as compared to large caps. So I think barring Bank Nifty, which is not in negative territory per se, or it does not have negative undertone, but it is one of the weaker indices at this point of time. And if it turns bullish along with metal and IT, right, it can just turn the flavor of this market, and this market can do amazing things in next few months. So, so broadly, that's the broad thought of market this week. And as I was saying, that we're going to look at the impact of monetary policy on the charts, and that's something that we have seen in bond market and equity market, especially the Bank Nifty and 10-year benchmark. We saw the impact of um, we saw the reaction of markets basis the crude oil correction in crude oil. So I think overall market is in positive zone, positive territory. I think uh, we should not kind of run away from the market or try to take aggressive positions at this point of time. We still have elections right ahead of us, and as we get into October, November, December, I think the noise around election will keep getting uh, the decibel levels will keep going up. One has to be careful. One index that I'm definitely keen and interested in is Nifty IT, which I have spoken a couple of times in the course of this 15-20 minutes conversation that we have had. And there are stocks within Nifty IT which I am definitely interested in, and outside Nifty IT also, which I'm interested in. With that, we'll come to end of this session. But thank you so much, and have a great week ahead. Uh, Let me also give you a disclaimer, as I continue to say. I'm not a SEBI registered investment advisor. I do not give out these updates to for anyone to take any calls on stocks or indices or any instrument per se. The whole logic of this weekly review, is to look at markets objectively on a weekly basis, try and see what the market is doing, try and understand how we are positioned in the market, and which part of the market is kind of making the moves, and in which direction. So that's the broad thought of doing this review. And as I keep saying, this review is more for my internal consumption, and I do it in a video format because I want to keep track of it and keep listening to it every now and then, or every couple of days, to understand what I was thinking as the week played out, and what I think is happening in the market as the market progresses. So that's about for the week. Thank you so much if you have watched the full episode. Thanks a lot, and look forward to another great week ahead. Thank you.